Alright guys, it's been a couple of days since we spoke, and what a couple of days it has been. We have seen a dramatic reversal in US dollars fortunes from Friday, where the market was selling every single dollar it could get its hand on. Dollar yen was below 108 and yields were just falling off a cliff. Now what we've seen since then is US yields have definitely rebounded, and they're actually key level right now, and they continue to rebound. Looking at the 1 day, it's very similar to the dollar yen chart. Looking at the 1 hour chart, very similar to the dollar yen chart. When yields go up, you get the dollar rebounding, and very importantly, you get US dollar yen rebounding as the main force of it. But you're seeing euro back below 120 and continuing to plummet at the moment. And this is a different scenario to pre-ECB. Yeah, pre-ECB, you have the situation where the market can stabilize and rally because ECB is going to come out and save the day, and Draghi is going to be announcing taper, or the whole event's a very bullish event, which it was, right? But the price action now is what is going to short circuit this. The only things coming up are all US dollar events, and those are biased towards positive US dollar events, right? So you've got a scenario now where the US dollar's on the front foot with options. The market's really priced out any rate hikes, but we've got inflation data coming this Thursday, where it's likely to be solid. Yeah, for whatever reason, whether it's hurricanes or whatever, it's likely to be solid, this data, and could be just a timing effect of last year's data as it rolls off. But what you're seeing here is that the headline numbers are looking pretty good, that they're expected to come in at just on a month-on-month basis. And then what happens the week after that is you've got the Fed. And the Fed is expected at this meeting to announce balance sheet reductions, right? Which is anti-QE, right? It's the opposite of QE. It's the reduction of some of that bond purchasing it's done in the past. Now, while this is not likely to be a very huge, no one's expecting it to be a huge US dollar event, it's definitely not a negative dollar event. So the two options are it's nothing or it's positive US dollar. Yields end up rebounding more sharply than anyone expected as the Fed took away support, signaling maybe the bottom is in for yields globally, blah, 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 right? Now, if that market wants to play something like that, or if yields go berserk, and bond markets sometimes do, what you'll see, it sort of coincides with the bottoms in European yields too. What you'll see is that the market can run with the US dollar story, or at least be worried about a potential US dollar story. And that US dollar story has legs, because if yields continue to grow and the market thinks that the next move up is December's got a higher chance than the market's priced in, or yields are increasing and this is going to have a bigger effect than before, then just the fact that this could happen is a positive US dollar percentage chance. It's like say it's a 25% chance it's going to be pro US dollar, and 75% chance it's going to be neutral US dollar. There's still a chance it's going to be pro US dollar, and the US dollar sellers, right, don't have that ECB backing, that North Korea backing right now. Now, obviously North Korea can come back and you can get some heavy selling coming through in the risk and stocks, but stocks since the open have been on a stellar run. Fresh highs in the S&P, DAX back above 12.5. Really relentless rally here going on in stocks. Risk is really on. Dollar yen looks like it's going to test 110 quite comfortably today. If it breaks 110, then the whole structure changes a little bit in this US dollar. If euro's down below 119, I mean, I'm not looking to buy here. I would look to buy at the big supports at 117 or 118. Let the US dollar have a rebound. And if you have a rebound in US dollar, then the market can come to the conclusion that the lows are in for US yields and the lows are in for the US dollar, and we're going to range bound or have a US dollar recovery. That's the risk here if you're not adaptable to that price action that's happened in the last 24 hours. So I'm definitely not going back to straight up selling US dollar right now. That just doesn't make sense on the timeline percentage or base of things, and the price action alone is scary here for selling US dollar. Obviously, if I was going to do it, I'd be looking to buy something a little bit stronger, like selling dollar CAD or buying Aussie dollar. But those stories are so well played out. They've all hit their targets. They've hit the year-end targets. The dollar CAD's hit its 2018 target. I mean, it's out of control strong. Aussie dollar's above 80 cents. I mean, short-term wise, every pair has the ability to pull back. Now the pound didn't get that memo because it's had some pretty strong inflation numbers and was running on the back of solid sort of Brexit talk movement, and also euro pound selling has been quite aggressive, and that's supported in pound yen buying. Always is a big support for pound when it starts up. Pound yen's just, you know, it's unstoppable almost right now. You know, look at the size of that rally in a couple of days. Jesus, right back up to almost the highs so far of the year. Now, so what you've got to be focused on here is that things have changed very quickly, and you've got to get on board or you get left behind. And if you fight this market, you can find out how high it can go. Dollar yen is not one for mucking around. And you can imagine that if you're, I don't want to buy a euro here, it looks a bit weak, but I don't mind the whole European yield rally scenario, and I don't mind, you know, eventually being long euro. What's a nice way of playing it? Well, euro yen's a really nice way of playing it. Another way of playing yen crosses, and that is also in a strong uptrend now. So, you know, this is everything sort of lined up against the yen right now, and it's very hard without a North Korea doing something more silly, which they definitely can do, because it was a surprise a little bit over the weekend when they didn't do anything. And now they've got sanctions, and they might have to retaliate with the only way they know how, which is to do something like launch an ICBM missile, which they might do tomorrow. You know, that could get the market focused on negative risk off, but I doubt that's going to shake this. The market looks like it's you know, sort of chosen its next direction, and so you sort of, you know, don't really want to be playing US dollar's got another leg lower after 10 days or 10 weeks of US dollar selling. You know, I mean, it's just, it strikes me as crazy if you're involved in that game. This looks real, it looks dangerous, it looks strong, looks like it's got legs, that US dollar rally. So the trade I'm in is long euro yen, sorry, dollar yen. I don't mind buying euro yen. Euro yen is also quite strong. US dollar index right back above that 91.80 level, looking pretty strong too. And so dollar yen is showing heaps of strength, pound yen is showing heaps of strength. Pick your poison, really. Now gold's fallen off a cliff as well, which it should have done given what's happened, but in terms of how much movement it can go down, 1300 is very possible. Yeah, very possible given the size and speed of the change in the market. Everyone's getting caught on the wrong side, right? If you don't get a little bit of weak US dollar data on the CPI, or if you don't get a North Korea testing something, then likely the higher it's just going to keep on going up. And so I've been talking to clients all day. How do we play it? We buy a dollar yen till North Korea tests another missile. You know, that's it, right? That's simple. Yeah. So that's the way I'll be playing it. And so how do you do that, right? How do you minimize your risk? Well, you put your stop to entry relatively soon, and you know, that protects you a little bit. All right, let's launch a missile. It falls 100 points, yada yada. Probably I'll be looking to buy because it looks like, you know, sanctions is the way the market's moving more than anything else in the current market. There is some ways to play some of the side pairs as well, crosses. I mean, Euro pound we talked about. Aussie Kiwis having a little dip lower. Now, depending on how you view the Kiwi, right? I'm a bit more longer term view. I want to be buying Aussie Kiwi, so I just let the Kiwi have its day. You know, see how the Aussie data pans out this week, because there's a lot of Aussie data as well. Unemployment numbers on Thursday. But then looking to buy this makes a lot of sense, I think. The market sort of shows the direction, I believe. I don't think we're going to go back into range trading, but grinding higher. Just waiting for this to clean out a little bit on the downside here. It may not actually go much further than this, but if it does, then it becomes a little bit better risk reward. Kiwis obviously enjoying a little bit of a rally, a bit more than most today, and this is on the back of strong local polling showing that the incumbent's likely to continue ruling, and that's seen as pro, you know, New Zealand business. So that's why you've seen that sharp little rally here this afternoon, and the Aussie Kiwi falling off. But yeah, I mean, in the face of US dollar strength, it's not going to go crazy. It's just probably going to outperform, similar to the CAD, right? And eventually, then Aussie probably get chucked in that. So what does that mean for Euro Aussie, Euro CAD, Euro Kiwi? Just keep selling those. They seem like they can go a lot lower. Obviously, CAD Yen is doing really well because it's a combination of the strongest pair, the Canadian dollar and the yen, which is the weakest. So you can play that as well. It's not a bad little option. It's probably not my favorite way of doing it, but you know, I'll buy dips on that for sure, but just worried about the dollar CAD getting reversed here because it's just gone so far so quick. It's being the little engine that can, can't it? You know, that's huge moves there. But what was that other pair we're looking at? Not CAD Yen. Euro Aussie short. Euro Aussie short starting to show some nice rollover here, and it makes sense that it's going to go down here in the current market. So yeah, I don't mind selling that actually. Maybe I should sell that a little bit now. Yeah, it's not the best level entry, but you know, it won't get better if it continues like it is right now with the risk on attitude. So the euro is acting a little bit like a safe haven in some regards now. You know, stronger stocks falling, helping propel DAX to be out of control here, because the lower you euro, the higher the DAX goes, just on a US dollar basis. And dollar yen 110 is the big level. I don't see any reason why I can't go past it though. I think the market's ready to sell on North Korea, but you know, you probably want to wait because they've been disappointed once, and North Korea might be having a new angle here where they're trying to get talks going. Yeah, and if they're trying to get talks going, they've done enough sort of mayhem to let them well know they're serious, and it could be detrimental to their plans if they actually keep on testing. You know, they've got the world's attention. Now they get the talks going. Rumors of backdoor or talks going on already. So that could spark a very nice sort of solution for everyone. But how that ends up though for North Korea, probably like Pakistan is what I've read. Pakistan is sort of a rogue nation testing nuclear weapons, but then have to get respect that they've got them. And then after that, they move forward with a little bit of I don't know, international oversights, just to make sure they're not going to use them. But that's a way forward, right? You know, you haven't seen many way forwards lately, and perhaps there is one there with negotiations, because war is not what, you know, Kim wants, that's for sure. I mean, North Koreans shouldn't want that. But you never know, there might be much more crazier than that and test another ICBM, right? Then, you know, puts the US in the back of a corner. You're very hard to fade DAX. I mean, DAX overbought short term, Chris, but yeah, it's not anything I'll be looking to sell too easy. I'm seeing what happens here, playing it out. Like I said, buying dollar yen, buying risk until North Korea does something else. If they don't do something else, we can end up a lot higher. If US CPI supports a strong dollar as well, you've really got yourself a turnaround, and you got the market positioned really short US dollars, so a clean out could be quite brutal. And you're seeing it right now, it's quite brutal, and it's pretty relentless. Pretty relentless here. So let's have a look at some of the banks' takes on some of this price action. Always interesting to see how quickly they turn bullish US dollar. Probably can't turn too quickly. Alright, after a failed attempt from Draghi, talked down the euro, USD printed fresh highs, blah blah blah. And a single print for first. Alright, so fresh interest has already fallen further than this. This is like, this is old news. Old news. This doesn't even know how strong the US dollar's got. So ING is saying here, forget the ECB, the big story has been the broad-based sell-off in the dollar. The week it's been high yielders, low yields, DM currency, all currencies. Not a preferred view, but they're saying the price action is so poor. I mean, now this is another old report, over 24 hours old. Can't be looking at that. Alright, here we go. So I'm not the biggest technical guy, but I was asking one of my mates who is, you know, what is a triple divergence and how important is it? And he says it's generally very strong signaling here that the trend is over. Yeah. So the triple divergence is when you know, you continue to have new lows, but the whatever sort of in this case it's a slow stochastic, but what you're seeing is that the dips in the momentum indicator, whatever one you're using, is getting higher, and in those scenarios it's showing you that generally this is what happens towards the end of a trend. And with that price action, the hammer, the morning star, this is pretty like the sort of stuff you see at the bottom. Now that wasn't the bottom, so the market ended up rolling over. But if you don't start to see this US dollar come back or yields stop rallying, and remember those yields are just out of control here, you should expect the US dollar to be testing topside. And it seems like there's a lot more stops now on the lower end of the euro and above 110 for the dollar yen than there is for the resumption right here, right now, randomly here. So without that short circuit here, I think the market's got to be squeezed if you're short US dollar. And we get the triple negative divergence here on the euro, so similar to what you got in the dollar, on the euro dollar, sorry, the dollar index, getting that same sort of pattern. And a move back to 115 is not a threat to the uptrend, right? That's just a standard pullback, really. And definitely every now and again you get those pullbacks. And probably after that pullback, if it took a couple of weeks, then the next thing would be the ECB coming in October, right? Then the market would be looking forward to that, and we can start to buy the euro again. But in the short term, if you're going to buy the euro, buy it against the yen, I would suggest. Trade with UD. No, the jobs report shouldn't do anything, mate. Jobs report shouldn't do anything at all. Yeah, no, it's had its fun today with the UK data. Tomorrow's UK wages is most important. PPI from US is okay. Crude is important. Aussie employment's important. Chinese industrial productions, I mean, it's going to get a notice, but not really. Swiss LIBOR rate is not important because it's just very unlikely to change anything. So the big rent risk this week is Super Thursday with the CPI from the US, but also the BOE. Now, with the pound being so strong, the dangers are for the for the pound to fall, because Carney is pretty dovish. Carney is definitely more dovish than the bulls in the Bank of England. So yeah, I would be looking for support from the Bank of England at these levels. It's huge moves going on in the dollar CNH and CNY. This market, got a lot of attention from the Chinese as well. I think the trigger point for them to start speaking in the press was when it broke 6.5. That was just too aggressive for them. Aggressive sort of moves here in the Swiss pairs as well, very similar to the yen pairs, Euro Swiss towards the high 115 dollar Swiss, but the big move coming in pound Swiss. And so let's have a look at pound Swiss. See, it's very similar to the euro pound, so sharp moves here. We're talking about buying it down at 122. Remember that day that it was down here, because at the same time that euro pound was near that, or heading towards 94, and we're like, oh, maybe we should start looking to sell this soon. But you sort of snooze, you lose. When the reversal comes in euro pound anyway, you don't get another chance. That's the big issue in that pair. So euro pound, I mean, it's really showing the way here. I suppose we should have been buying on the trend line break, or selling on the trend line break, sorry. But it did give a fair bit of clues that it was going lower. Some major reversals. This is after ECB didn't really get too far. And then the pound, when it broke 130, perhaps at that time we should have been selling euro pound. It was just happening with no real story behind it, so it was like, I didn't really have the conviction that I like on that pair. But yeah, it's definitely getting my attention now. So let's see how it responds in the next couple of days. Maybe after Bank of England, you get a little rally again, and if that fails, we can sell into it. and start to play the game of selling euro pound rallies, and we could play that game for the next 12 months, guys. If we if the market wants to play tops in on the euro pound, or just generally on the pound, the bottoms in, then a euro pound's not a bad way to play it, because it's historically a lot higher than it should be. Sort of like playing, you know, Aussie Kiwi below 105. You can buy with a little bit of, you know, faith that it's going to come back up rather than anything else. Euro CAD, this is not a bad way to play this as well. You know, CAD's just so strong. I'm playing Euro Aussie rather than Euro CAD, but they're very similar pairs. If anything, the CAD's a bit overbought and the Aussie's just warming up. And the CAD yen, yeah, obviously that's super strong given the divergence between monetary policies there in Canada and in Japan. So yeah, you can see it in the charts. The market's reversal and, you know, the risk on feel is so strong. It's going to be very hard not to. Jesus Christ, the Dow's just kept on going up all day. Hasn't broken. Like, let's see the open here in 2 hours and see what happens. But yeah. So yeah, I'll hold this. Actually, I haven't been making many gains in CPA investments. I got whipped out 2 or 3 times in the last week. That was not fun. I was selling euro dollar, remember, into the ECB. You know, at here. That didn't work out. And it would have worked out obviously if a huge stop. But at that point, you know, you couldn't really hold a huge spot. There was a chance the market just blew off the top. And then the euro yen trade I had running. With the ECB, I cut with a small loss after the open there, because I wasn't so sure what North Korea was going to do or how the market's going to respond. That was really sort of that was a timid cut. That was, you know, perhaps, but yeah, a few little shavings off the account, so not you know, great price action. But yeah, we can turn it around quite quickly. I mean, the thing about trading is when you lose, you don't lose much. Yeah, you lose your 30 points, your 50 points. You know, maximum 100 pips in a trade. And then when you win, you try to make, you know, steady 50, 80, 120, 150. Those sort of returns, if you're doing it at 50-50 even, is good enough to grind your account up. And it takes a really bad spell with the market wild and you can't adjust to get hit. You know, and even when you get hit, you'll lose 10% in a month. And that's a completely different feeling to, you know, trading with your whole account balance with 5,000 in your account, trading standard lots, and then, you know, one day getting wiped out from some silly trade that you didn't really want to do, but you got stuck in, and, you know, that's that if you don't capitalize yourself properly, then yeah, it's much easier to blow up in a drawdown, or just psychologically. Like psychologically, if you got 5,000 in your account and you go down 2,500, it's very easy for your brain to go, well, fuck it, all right, I'll just risk the other 2,500. 100%, guys. I swear to you, this is how your brain thinks when you're down enough. And because if you can't close, you know, by the very fact that you got 5,000 in your account, you're trading standard lots, you're probably not there yet ready to be trading that big, and you're a little bit more towards the gambling side. And if you're towards the gambling side, when you're down 2,500 floating, you want to see what happens next rather than close. So if you can cut, you know, a $2,500 loss out of 5,000, then you probably shouldn't be trading a $5,000 account. You know, so it's like self-proving that you know, if you're gambling and you're trading too big for a small account, that you're not going to be able to close out, you know, 50% drawdown if that's the right thing to do. If you sold dollar yen on the rally and you're still holding short now, you know, you're probably faced with that similar idea when you trade. So yeah, it's all about approaching it like a business and being boring in your trading. If you really want to make money out of the game, if you want to turn 1,000 into 100,000, you can do it, but it's more likely than not that you're going to lose it. Yeah. The other way to trade that does work, and I've seen work very well, is you withdraw profits. So you make 10,000, you put 10,000 in an account, and you're trying to make it to 20,000, and you're taking out 10,000, and you repeat. Yeah. And if you're a good trader, pretty aggressive, you take big bets, but you're pretty good at picking the move and you don't trade too much, right? You just keep your money in your account and you wait for that opportunity, whether it was, I don't know, buying dollar yen at the open yesterday after it started to keep going, whatever it was, but you double your money, you take out, you know, that I've seen good traders do that, and I've looked after thousands of traders. That sort of trader makes money. Big accounts generally are the only other guys that make money, and then you get very rare small accounts becoming big accounts and then settle down to trade properly after taking huge risks to make 50k, right? But that's very rare, and the other 80% of accounts just at some point blow up because they're just trading too big for the surprise that eventually hits them. Yeah, the surprise RBA hike, you know, or the surprise Bank of England hike, you know, whatever it is that you get caught on, the surprise failed, you know, missile test from North Korea that lands in 100 kilometers from Tokyo, blah blah blah, whatever it is, you know, and then you're really destroyed. The one time you don't use a stop, blah blah. It always happens, right? So many ways for you to kill yourself. So yeah, well capitalized in trading with good risk management is the only way that works for sure. But other ways where you take out profits and you take big risks, but you know sort of what you're doing, that works as well. But anything else than that, it's just a little bit of a dream. Sorry to say, if your plan is to turn 1,000 into significant money. And I would love you guys to prove it wrong, but to do it safely, you have to do it slowly. So it's just going to take a lot of time. Much better to go get a job and then build up your account. Yeah, have real money going into your account, $500 per week or $500 a month, building it up, trading safely. Treat it like you want to get your money back. Yeah, like it's real. Just looking here at the Nikkei. Yeah, it looks pretty strong too. Everything here suggests that dollar yen's going to break 110, guys. So I'm not too worried about that. With 100k, what risk management would you recommend? No more than 2 or 3 lots, maybe 4 lots, 5 lots if you're really doing well. But even then, that's pretty punchy. I mean, you want to make about 1,000 a week on 100k. Yeah, that's what you want. If you're getting lag, just lower the settings there, Lingsy. It shouldn't be getting lag on this stream. The upload is pretty strong here. So yeah, it's yeah, probably try to make about 1,000 a week. Okay, amazing. If you have a bad week, you don't want to lose more than 2,000. So that sort of target is what you want. A little side read here on risk management tonight, boys. Hey? You're getting the preacher tonight, the risk management preacher. Well, this is written on the weekend. So 132 and the pound has been broken. They don't think it's going to get too far though. Net longs in the CAD are currently at the highest level in 5 years. That's a positioning issue, guys. That's pretty dangerous. NAFTA negotiations are extremely dangerous for Canada. Extremely. You're looking for a way that the dollar CAD can get back to 130. If Trump pulls out of NAFTA, all of a sudden Bank of Canada is not raising rates under that environment, regardless of how strong the economy is. You know, it's just too much uncertainty, right? So they would be like, oh, let's wait and see. So that that's 500 pips higher, and then US dollar strength just because, you know, blah blah blah. You know, you can easily get to 130 in that. Right, so tax reform is the huge side issue here, guys. If they can get progress on tax, that can propel a huge US dollar rally. If that can get us back to 95, no problem on the dollar index. If it gets through and it's decent, it can get to 100. The US dollar rally would be back in that regards. Especially if the yields start to respond by going higher, because especially it comes with stimulus, because it would be very stimulatory to cut corporate tax rates to 15%, but more likely 20-25%. I think the Kiwi's going to get back to 75, and they're thinking Aussie's going to keep on around 80. I think the thing with the Aussie, I think as soon as the market gets whiffed that the RBA is closer to raising than anyone expected, we're going to go up towards 85, maybe towards 90. And the RBA is going to be hard for them to continue to be dovish in the face of our unemployment data. We get any sort of inflation coming through in Australia, Aussie dollar's going up. It'll be the go-to trade. It'll be very similar to the CAD, how it moved in pre-BSC rate hikes. I don't see too much upside in the euro. I think the euro's story's just begun at the moment, but yeah, the US dollar is pushing back here, so we might be sideways for a little while. Dollar yen's the one where I think the chances of the big rebound is. They're looking for dollar yen to get back to 114 in the coming 6 to 12 months. That's really possible, guys. That's really, it's definitely on the cards. Gold, gold, I mean, gold's been surprisingly strong. So let's not rule out that it can go up, especially if the risk off continues. But yeah, it's had a big run. It's had a big rally, and you probably need something substantial to help it go up from here. Not just more missile tests, but something else. Alright guys, so let's see how we go this week. You got new trades, new direction set by the market, a new trends beginning. If you're not in these trends, wait for the pullbacks on the 4 hour. Then you can try to get advantage of them, test them out for 1 or 2 goes. If the market turns on the US dollar again for whatever reason, you won't lose too much if you wait for your entry point. But you can't be wrong all the time if you're following the sort of the new trends. And if you're going to try and play the US dollar weakness trend to continue, the bigger trend, pick the stronger pairs. Yeah, so pick the pound, pick the euro at the right levels, pick the Aussie at the right levels. The Aussie was great off 80 today, really responded nicely off that. But you wouldn't buy the second test of 80, right? That doesn't make sense. Not unless the price action is good enough. But yeah, so let's be very careful how you actually go about buying US dollar, or selling US dollar here. Alright guys, best of luck. I'll be back tomorrow same time, and then on Thursday we're going to do the Bank of England live. Actually, I don't recommend using position size calculators. Just stick with the one. Stick with the one, then how much it is per pip in every different pair that you trade. Because if you're trading euro pound, one lot is way different per pip to dollar yen or Aussie Kiwi. So yeah, keep that in your mind. AK amazing. Alright guys, best of luck here. It's a tricky market, but it's a very profitable market if you're nimble. So try as hard as you can to not have preconceived notions about what happened last week is going to continue again this week.